Hey traders, it's John Howell here, and today what I want to do is I want to help you with one indicator you can use on the chart to help you identify if your stock is overbought or oversold, which is also going to help you identify maybe when you should be looking for an entry, or maybe when you should be, maybe the warning bells are going off of not entering that stock because it's not the right time. So let me just share that with you and let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Traders, I'm running a bit of a sale right now to my breakthrough trading course. It's just for $7 only. And there's something like 12 videos or something like that. Anyway, you'll be able to see all the details if you go to the very first link in the description, or go to johnsflashsale.com just for $7 traders, and you can get a lot more trainings just like the one you're seeing right now. Now, what I like to use, and it's really one thing that I've learned over my time looking at these markets, is everything's based on probability, right? There's no based on certainty. So whenever looking at the markets, I want to use whatever I can to help me identify when when a good high probability area is in the market. And if I'm looking to buy a stock and I realize it's massively overbought, well, then there's a high probability that particular stock's going to sell off, right? Because it's overbought. Same for the ups, same for the downside, right? If a stock is oversold, like it's been sold off so long, but it's getting close to a really oversold level, well, you wouldn't want to be shorting that stock, right? You might want to be looking at buying that stock. So I'm not telling you that that to do that, but this is going to help you identify if your stock or whatever you're looking at, cryptos, every single market out there operates the same way, traders. Okay, if you're looking at the Forex market, crypto markets, like they all operate the same way. They all make the same patterns. Everything is traded by the same people, right? It's not like, oh, well, Forex traders are different to the stock traders, and stock traders are different to the crypto traders, and they're completely different markets, and they operate differently. It's the same machines, it's the same humans trading everything. Therefore, that's why if you can understand looking at reading the charts, and again, in that $7 trading course, I think the first 3-4 videos I go into just chart reading stuff before I look into trading systems and the mindset. So what I like to use, and the number is irrelevant, but I like to use sort of a longer term moving average on the chart. Now, what I mean by a longer term moving average, I like to use the 52. I think 52 is a good moving average. Now, why 52? I don't know, traders, just one of my earliest mentors, when I learned from him, there's 52 weeks in a year. So I guess like a 52 moving average on a daily chart, that'll give you, like what, a couple of months. So so I use a 52, but it could be a 60, right? It could be a 70. It's really, the numbers are relevant. What it does, it represents the one thing. There's a lot of things that the moving average represents, right? Represents overbought, oversold, and also momentum. So, like for example, if I'm looking at, I wasn't going to talk about this in this video, but I'll give you guys a bit of an extra bonus training here when looking at the moving averages. When I'm looking for, say, a short-term, what I call a short-term cash flow trade, right? Where I'm looking to be in and out very quickly. It might be, now this is using a daily chart here. So I might be in today and out tomorrow, or I might be in today and out within a few days. That's what I call a short-term cash flow trade. If I'm looking for that, then I know that if I'm looking to get in and I see the 52 moving average doing this and doing this, as the market is stair-stepping up. See this stair-stepping phase? Well, then I know, guess what? I know that I have good, strong, long-term momentum behind me. And that's one of the things that I like to use in the markets to help me with that. Now, one thing I really love about the moving average is that if the moving average is pointing in a direction and the market is stair-stepping and it pulls back and then it bounces off, I love that scenario. Market comes back down, pulls back. Look at this here. Strong momentum on the downside, pulls back. It starts to reject off, and then we have a nice move. Nice move, right? So again, it's all about the direction, which is the direction just means there's strong momentum behind those periods, okay? Now, that's not what this training was all about, but I just want to share with you how just one simple moving average can give you so much insight to what the market is doing. Unfortunately, we will have indicator here and indicator here and indicator here, and we have all these indicators here, and we can't really see what's going on with the markets there. So using the moving average, you'll notice that if I bring up to where we are right now, okay, so I'm doing this recording, and it's obviously at the start of this year, right? So looking at this particular market here, you'll notice that if I zoom out a bit more, you'll notice that look at this market here, right? What happens? The market doesn't get too far away from the moving average. Now, if it does start to get vertically up or vertically down, look at this here. See how far we went up there? Look how far we got back down to there. Look how far we got back down to there, right? It's a warning sign that, okay, if we look at the maximum distance, this particular market, like, and you use this for any stock, any market, you'll notice it doesn't get too far away from the 52. Now, again, that could be a 50, it could be a 60 moving average, right? You'll just notice that it doesn't get too far away from it before it's like, okay, now we're getting to overbought territory here. So overbought and oversold. See these levels down here, oversold. Now, when looking at the vid crash, right? What happened last year, or what happened? Was that last year? Actually, that was 2 years ago now, wasn't it? Holy dooly, we're 2022. That happened in 2020. Wow. When the market started to get down the bottom here, and we started to find a bit of a support level, I knew we were pretty far away from it. So for me I actually started to look to buy in, I think it was around about here. I started to look to buy, and then we did that, and then I did quite well from it. But as you can see, right, if the market has had a big sell-off, there is a warning sign. If you're like, oh my goodness, the market's gone down, the market's going to keep going down, and you start to see sort of the distance away from the moving average, like look at it here, right? See how far we got away, and then guess what? We came back down to it, right? So if the market starts to get too far away from the moving average, doesn't mean it can't continue down, but there's a high probability it's going to snap back pretty quickly, right? Just saying back here, what happened back in late 2018 into 2019. Oh, this is actually 2018. And then you can see, look what happened, right? We got too far away from it, like the maximum distance away. Look how far it got away from it. Normally you don't get that far away from it. So that was the oversold territory, and then the elastic band sort of snapped it back, right? Same back through here, right? This whole rally through here was through the Trump, tax cuts and so on and so forth. So look at it through here, right? We started going up, and then guess what happened? We got so far away from it. Now, you never know the exact day, but if you start to get to here and to here, warning bells start to go off in your head that, oh my goodness, if I'm actually looking to go long this market right now, and the market is this far away from the moving average, yeah, there might be a 10 or 20% extra move to the upside, but there's a high probability we're going to come back down to the moving average, especially if we get too far away. So that is the one technique that I use, traders, in my own trading to identify if the market is overbought or oversold, or if it's actually a good time to buy. Now, to me, when a good time to buy, now I obviously have my trading checklist and I have a trading pattern that I trade off. But for me, if the market comes back down and bounces off the moving average, bounces off the moving average, see that there? See how it's, and the market and the moving average is trending up through there. The moving average is trending up and we bounce. See how we come down and we start to bounce. Come down, bounce, come down, bounce. See that through there? So come down and then bounce. Those are the times for me personally when I'm actually looking for a really good sort of setup for my particular trade. And so you can see that that's to me, because if we're at the moving average, guess what that means? That means we're not overbought, we're not oversold, right? We've got that sort of equilibrium. So if we go back to, remember this back through here, right? Remember we actually had the not much going on, look at this here. It actually hit this strong moving average coming down. It actually bounced off it, and then we started to head down. And then look what happened. We had a little bit of a bounce, and then we actually started to sell off really, really, really quickly. So for me, when I'm looking for trading opportunities, to me, I love it when the market has a bit of a pullback, bounces off the 52, and it starts to do that. To me, I'm looking for the market. I'm looking to get long on, say, setups like this here when the market bounces off, especially when the moving average is trending up. It's just absolutely beautiful when that happens. And if we just go back through to here, you can see, look at all of last year as an example, right? You can just, this happened all of last year. Look how strong this moving average was all through there. And look at this here, right? Came down, bounced, came down, bounced. Look at this here, bounce, nice move, bounce, nice move, bounce, nice move, bounce, nice move. No bounce, no bounce. Look at this here. Bounce, nice move, bounce, nice move. Right? Again, I'm talking about, like, this is short-term trades, right, guys? I'm not talking about capturing a very long-term move. A very long-term move, you're going to have to go through, sort of this sort of swings here. So just use this, traders, and I guarantee you, you're going to start to increase your win-loss ratio, and also you're going to stop yourself from getting into trades where you start to get sucked into that FOMO. Because especially when we start to go through these periods through here, we're getting into fear. The market is going to continue melting down because you've got the bumblebees, talking heads come out with the news articles and so on and so forth. And these periods through here, and then even up through here, down through here, the talking heads are going to, like, oh my goodness, that fear of missing out. So you want to short. A lot of people will short the market down here because they want to just they think the market's going to continue to crash. Or up here, they think the market is going to end. And I'll leave this off with a good old chart here for a minute. And this is one thing that led me to believe that we were getting ready for quite a big pullback out of gold. And this was because, look at this here, right? We had a strong moving average, but look how far we got away from the moving average. If I squeeze my charts up, look at this here. Right, see how far we actually got away from it? We got so far away from the moving average that the moving average was telling me we're likely to get pullback. Now, I didn't know I was going to pull back for a whole 12 months. Now, what's going on with gold right now, it's a different video. It's not what I'm trying to present in this video. But as you can see, when we get too far away from the moving average, it starts to give us a warning sign that we're now too far overbought, too far oversold. And so I started actually doing videos around about here. It wasn't an exact high, but I'm like, guys, this is not the right time. We're going to get a strong pullback. And as you can see, look at this here. We did get the pullback, didn't we? Especially through there, right? We did get the pullback, but did we get the bounce? We didn't. See how we definitely got the pullback to the 52, and we got a little bounce, but we actually didn't get the bounce, breaking out of that level, right? We actually just got a sideways, a little bounce, and then a continuation on the downside, and then it's just done very, very, very volatile. Look at this here, resistance here, and then a rollover. So I hope you enjoyed today's video, traders. Just use this. Again, just one simple moving average. Keep your trading simple, and I promise you that you don't need all these different indicators to have a really good trading career. We just need to simplify the process, remove all that garbage from your chart, guys. Because you think, oh, well, I need to have the Bollinger Bands, the 3 moving averages, the 4 different indicators to have a really good probability. The biggest probability is understanding what the market is doing, and some simple things like this. That's gonna small hinges like this swing big doors in the markets. So traders, when I first started trading, I lost $250,000 trading the markets. And then I got access to a few 7-figure mentors that really set me straight on what I need to do with the foundations, how to read the charts, the trading systems, the mindset, so on and so forth. And then that was the massive turning point for me to be doing really well from actual trading and being successful trading. So what I've done is I've created a course called the Breakthrough Course. And what I've done is I've actually put a whole bunch of really good education and strategies and processes that help me go from $250,000 in debt to then actually becoming a full-time trader, making a full-time income from trading. And I'm actually running a flash sale to that trading course. So if you go to johnsflashsale.com, or there should be a link in the description. If there's not, then go to johnsflashsale.com. That's JOHNS flashsale.com. Go to johnsflashsale.com and you'll be able to get access to this course now for $7. So go get access to that right now, guys, and I'll see you real soon.